Hello, good evening, everyone, and welcome to this webinar series 17 on consideration of fraud risk in internal audit organized by Board of Internal Audit and Management Accounting. And today we have with us our Honorable Vice President, Sir C.A. Charanjot Singh Nandaji. And the speaker for the day is C.A. Huzefa Unawala, and who will be taking us through the considerations of fraud risk in internal audit, and we have very vibrant moderators, C. Aarti Karvande and C. Shweta Jagawat, and all very knowledgeable and intelligent participants. This today is the 17th series of this year, but all of you are aware that whenever anything comes in internal audit at institute, the first name to everyone's mind comes to is Sir C.S. Nandaji. So, sir, welcome you to also. And friends, before Anandaji speaks about something on this session, let me tell all of you the fraud risk is day by day, the types of fraud risk is changing, and the way the methodologies are also changed because of the innovations in the technology. And accordingly, the new internal audit techniques are also required to be modified. And Huzefa ji will be taking us through all those things, which is the recent developments and what are the types of fraud risk and how this risk mitigation exercises can be done. So, welcome Huzefa ji. And as regards to Nanda ji, Sir Nanda ji was the chairman of this board since so long and has served the institute in the form of internal audit and has brought various standards under his chairmanship, has devised the diploma course, has devised concurrent audit bank certificate course on concurrent audit of bank, modified the same, which is running right now also at various branches, and online batches also are going on. Various courses Sir has devised as well as the standards. So now Sir has taken the leap and has become the Vice President. So welcome Vice President Sir, and we are eager to hear you. Over to you, Sir.
Thank you, Preeti Ben, the Vice Chairman of Internal Standard Board. So very good evening, ladies and gentlemen. Today we gather here to address a critical topic, considerations of fraud risk in internal audit. This gathering of our members highlights our commitment to advancing the accounting and auditing profession by learning new ideas and new disciplines. You're all aware that fraud is a persistent challenge across organizations. As internal auditors, our role is not only detect but also prevent fraud in various forms, such as financial misstatements and asset misappropriation. Internal auditors are essential in mitigating fraud risk by, first of all, identifying incentives and pressures, whereby they recognize financial and personal pressures that may lead to fraud. You have to detect opportunities for fraud, whereby you analyze weaknesses in internal controls that could allow frauds to occur. You have to understand rationalization and identify justifications fraudsters use to act. Every person who commits a crime has a justification at the end. Now, when you go deeper into it, you need to understand the key considerations in fraud risk management. For fraud risk management, you need to conduct ongoing risk assessments to adapt to changing environments. And foremost of it starts with professional skepticism, maintaining a questioning mindset to ensure thorough audits. You have to uphold ethical standards using objectivity and integrity in our evaluations. More so, you need to collaborate. You have to work with other departments to ensure a unified approach to fraud detection. You need to have technology tools. We speak about digital forensics. Yes, you need to utilize text analytics and automated systems to enhance fraud detection. You need to have best practices and frameworks to bring you to a parlance where you ensure that fraud is not happening. You have to establish frameworks like the COSO framework and the fraud triangle, which helps strengthen our internal audit practices. We all have to move forward together. We need to tackle fraud risks proactively, continuously improving our skills and advocate for best practices in internal audit. Let's commit to maintaining the highest standards to protect our organizations and uphold our profession's integrity. Thank you all for your attention. I look forward to discussions on effectively maintaining fraud risk. I am also thankful to the Internal Standard Board under the chairmanship of C.A. Prakash Sharma and vice chairmanship of Madam Preeti Savla, who thought of this topic, which is very pertinent to the growth of profession today. You are all aware that internal audit essentially is a management function, and at times we feel that we understand the entire internal audit. But ladies and gentlemen, it is an ever-changing proposition. I am reminded of a couplet which says, क्या यूं ही मुझे चंद लम्हों में पढ़ लोगे तुम? क्या यूं ही मुझे चंद लम्हों में पढ़ लोगे तुम? मैंने खुद को लिखने में बरसों लगाए. So internal audit is a discipline which has created this level of indulgence by a lot of innovations, lot of changes, lot of perseverance. So be patiently involved in listening to the speaker, Mr. Huzaifa Unawala, and go home more relating, putting at rest all the doubts that may have arisen during the course of your professional attributes. Wishing you a great event ahead. Thank you. Thank you so much.
Thank you very much, sir, for your interaction. And this really means a lot to everyone. Thank you so much. Moving forward, and let us have a excellent knowledge sharing session. And I request Aarti to take further the proceedings.
There are two Artis.
So our Aarti Bansal is always is our secretary. So thank you, Aarti Bansal, for all the support which has been provided by you to the committee and for knowledge sharing sessions. So now I request Aarti Karwande to please take it.
Thank you, Preeti ji. Good evening, everyone. Firstly, I would like to thank the Board of Internal Audit and Management Accounting of ICAI for giving me the opportunity to moderate this session. Dear members, welcome to today's webinar on topic Considerations of Fraud Risk in Internal Audit, a crucial subject in today's complex business environment. Members, imagine internal auditors as the superheroes of the corporate world, each equipped with a fraud-busting toolkit. Think of capes, masks, and superhuman attention to detail. Today, we will explore the superpowers needed to identify and mitigate fraud risk within the internal audit process, and maybe even discover our inner superheroes along the way. I have been given the exciting task of introducing our superhero for today. We are honored to have Mr. C.A. Huzaifa Unawala, the founder and senior partner of JHS and Associates LLP. Mr. Huzaifa is a transformational leader in the governance, risk, and compliance practice with over 25 years of experience. He has advised clients on handling complex business problems and delivering customized solutions, and he currently leads a multi-skilled team of over 400 professionals. Previously, he was the partner and national head of risk advisory services at BDO in India and has held significant roles at GT. Mr. Huzaifa's expertise spans across various domains, including risk-based internal auditing, forensic accounting, enterprise risk management implementation, internal financial controls implementation, and IT assurance, including SOC attestation. He has also contributed significantly to the professional bodies like IIA, ICAI, BCAS, and CAC, and is known for his thoughtful leadership through numerous seminars, events, and industry forums. Now, if you imagine internal auditors as Sherlock Holmes to the corporate world, then Mr. Huzaifa is undoubtedly our very own Sherlock. Please join me in welcoming our own Sherlock, Mr. C.A. Huzaifa Unawala, as we embark on this supercharged journey into the critical considerations of fraud in internal audit. Thank you and happy learning. Over to you, sir.
Thank you, Aarti. I would like to thank Nanda ji, Preeti ji for having invited me today and for the wonderful introduction given by Aarti. Thank you so much. It was quite generous. I will move on to the topic. The topic is relating to fraud risks and what are the considerations in internal audit activity. The subject itself is very glamorous because when you talk of the word fraud, immediately there is ignition of thought and minds of not only the internal auditors but also the auditees. Generally, internal auditors always seek a lot of information from the management and keep on seeking information, and the management keeps on coming back that what is the value that you're going to add by taking so much of information. But when you start talking to them about the subject of fraud risk, then immediately you draw their attention to the heart and soul of the business processes. So I will, of course, take you through my slides, which are about 50 to 60 slides, taking you through the background, the preface, and then moving on to specific fraud risks, and also talking about few case studies. Practically, how do you implement fraud risk assessment in organizations, followed by certain best practices. So I'll just start sharing my screen. I hope my voice is audible.
Yes, sir.
Great. Okay. All right. So this is the topical index. I have a preface. Then we'll talk about part one of fraud risk, essentially talk of the definition of fraud and fraud risk indicators, key audit matters that are recently reported by accounting firms, by statutory auditors, which would be very useful for us as internal auditors. A birth of unaccounted money, which is the biggest menace, corruption and money laundering. Digital age frauds, greenwashing, the new emerging fraud risk areas, followed by case studies, and then few fraud risk indicators in procurement function, followed by certain best practices. So when we state the word fraud risk, what comes to our mind? I will request all the participants to get on to menti.com. I will switch my slide and request all of you all to get on to menti.com. There is a code which I will share with you. Request you to use that code to participate in the survey. So is this is this visible to all of you? Is this visible to all of you?
Yes.
Okay, great. You can use the code 328 to give your responses. You can.
So, Aarti, whether these participants are enabled to give the responses?
Yes. Yeah, it will appear on the screen.
Hmm.
They have to just use the code and it will start appearing on the screen once they start typing.
No, I wanted to understand because.
Yeah. Yes, yes. So they have to go to mentimeter.com. If this is becoming a challenge, then I'll move to the slides. Then
No,
maybe
let us
towards
wait for a minute whether it is
Okay.
happening or what, because you already put efforts, lot of efforts for this,
Sure.
right?
Right.
Let us understand.
Probably the participants may be finding it difficult to go to Mentimeter.
So
.com.
I'm
So
seeing a
I think
screen which says enter a word, enter another word. That's the screen, right, sir?
yeah.
Okay.
So when we talk of fraud risk, what generally comes to an auditor's mind is something that we can type in our responses to create a word cloud or a word picture. Okay, great. We have misappropriation of money, loss of money, misstatement, weak controls, reputational loss, alarm. Okay, anything else? Lies, think these are some natural words that may perhaps come to your mind. Malefical profit is a good one. Internal controls, weak internal controls is a good one because that is an opportunity for fraudsters to execute frauds. Intentional, yes. Good. So I think this word picture gives us a very good background to can also do with your clients while you are doing your internal audit planning and specific to their business and to their industry as to what comes to their mind in terms of fraud risk situations and scenarios. So once they are able to articulate their thoughts on specific fraud risks carefully, because generally clients are quite timid, they're shy, they don't open up while talking about fraud risks in organization. So you have to handle it in a very subtle manner with approval of the highest level. I'll just switch back to my slides. Okay, let's go to the preface of the presentation. Uh, for audio quality reasons, I'm just switching off my video. So what is the significance of fraud risk assessment? There are some bullets here, which I put up on the slides for you. One is that there is a growing expectation gap between the owners of business, the audit committee expectations, regulators' expectations, and internal auditors' performance. Second is traditional internal audit is not able to add value in a sustainable manner. Heightened regulatory expectations, be it SEBI, Reserve Bank of India, IRDA, you would see so much of penalties being levied on a daily basis when you read the newspapers. So the subject of fraud has captured the imagination of all the regulators in the country, including Ministry of Corporate Affairs. SI 11 of ICI mandates fraud risk assessments. Managing audit risk is becoming a big issue for internal auditors, statutory auditors. How do we protect ourselves? So fraud risk assessment is like an insurance that you're taking for yourself as a practitioner. If you have done a qualitative fraud risk assessment exercise, you will go a long way in demonstrating to any regulator, any board, any audit committee that you have done your job effectively. You may not have unearthed or identified a fraud, So you may not have done a forensic exercise, but the fact that you have put your mind, applied your mind on fraud risk situations that are potentially capable of giving surprises to the management would suffice as a good job from an internal auditor's perspective. Internal auditors, yes, can give power punches, can become very glamorous if you discuss the subject of fraud risks with your clients, your existing clients, where you can add value. Because quarter on quarter, month on month, or annual basis, there is only the scope items that you can execute, which are in the books, which are in the records, in the statutory filings of the organization. But fraud risk assessments will help you go beyond the books, will help you anticipate fraud situations, and will hone your skills as well. It will prepare the organizations to become more fraud resilient. Now, just to identify what a fraud is, and what are the differences between a forensic audit and a fraud risk assessment. They are two different subjects completely. Many times there are myths around the subject that fraud risk assessment means actually forensic accounting. No, that is not the case. A fraud is generally unethical conduct or behavior such as theft, robbery, deception, cheating, breach of trust, fraudulent financial reporting, misappropriation of assets, revenue and misapplication of accounting policies, bribery and corruption, money laundering, computer crimes and extortion, conflicts of interest. So you would see the definition of fraud under section 447 in the Companies Act, which talks primarily of three things: intent, deception, and wrongful gain. There should be an intent to commit a fraud. There should be a scheme to execute the fraud. And finally, there should be a wrongful gain. So in a forensic audit exercise, the intent is tested, the scheme of deception is investigated, which is known as the modus operandi, and then there is a trace of money, the wrongful gain that have been diverted, siphoned off, and where they have gone. So when you do all these three things put together, you reach a forensic audit opinion. But in a fraud risk assessment, you generally prepare a fraud risk scenario and you execute the fraud risk scenario on the basis of discussions with the management. Now, one of the most important techniques in fraud risk assessments is the use of mystery audit and mystery shopping, where on a surprise basis, a team of auditors will visit a branch or will visit a store or a retail outlet or any operational department or unit of an organization, posing in the garb of a customer or a supplier or a vendor or a third party to test the behavior and the honesty of the stakeholders. And once that gets tested, so then a report is generated. So surprise or mystery audit is emerging as one very effective tool as far as fraud risk assessments are concerned. Generally, these are very much in vogue as far as banks, NBFCs, gold lending companies are concerned, where mystery audits are done regularly as part of the fraud risk assessment process. Even in case of normal procurement function, mystery audit is emerging as a very effective tool where where an auditor can go in the garb of a supplier, touch base with the supply chain head, touch base with the procurement head, try to honeypot them and try to see that if the behavior changes. To share certain practical experiences and insights with you, when mystery audit or fraud risk assessments have been conducted by my team, we have found the HR heads, the procurement heads to be very vulnerable. Like one common fraud risk scenario is, sorry, is selling of databases in an organization. So HR departments are very susceptible to selling of employee database to competitors, to third parties, because the employee database has got all the details of the KYC details of the employee, salary details, payroll details, etc., everything. And they are quite susceptible and vulnerable to a honeypotting scenario. Even the procurement department and personnel are pretty vulnerable to corrupt practices, where a honeypotting scenario can be developed against a procurement team and can be executed and can give you wonderful results. Now, what exactly is fraud risk indicator? We saw the definition of fraud. Now, there are two significant aspects to fraud risk factors. One is events or conditions that indicate an incentive or pressure to perpetrate fraud, provide an opportunity to commit fraud, or indicate attitudes or rationalization to justify a fraudulent action. So, what do you mean by an event or condition that would trigger a fraud risk for an organization? So, let's take an example, practical example here of say there is a piling case of non-compliances. You as an internal auditor are highlighting number of times that statutory compliances are getting delayed to the management, and the management is not acting against the statute non-compliance of statutory norms, thereby exposing the organization to not only litigation but also to a lot of I would say activism from the departments, from revenue authorities in terms of search, seizures, raids, etc., etc. So if there is a continuing default in terms of compliances, there could be certain indicators, because that would immediately indicate the intent of the management. Second is a distress situation where there is a default of loans taken by the borrower and is not able to meet the cash flow commitments, the financial commitments on a monthly, quarterly basis. So there could be such pressures that could come on the management, and that could trigger off certain fraud indicators and real life fraud situations. Now, what are significant unusual transactions? Significant unusual transactions are those transactions that are outside the normal course of business for the entity, or that otherwise appear to be unusual due to their timing, size, or nature. Now, here, most of the times I have seen unusual significant transactions are related party transactions, which we should be very wary of as internal auditors. If there are material related party transactions which have not been approved by the audit committee or by the board of directors, they are significant unusual transactions. And we have seen a recent example of Paytm, where there have been significant unusual transactions that are of the nature of related party. Second, significant unusual transactions could be in the nature of debiting personal expenses. Now, we have seen that there is a tendency of promoters, owners to book fictitious expenses to manage the provision for taxation liability of the company. So this becomes a starting point where it's an acceptable practice of putting in personal expenses to inflate expenditure of an organization, and over a period of time, then this becomes a habit. So again, a significant unusual transaction relating to personal expenditure debits, related parties are some examples that you could look out for. Unusual indicator examples, continuing with few more practical insights. Large number of entities in a consolidation group. Transactions exist to enable entity to achieve only their financial targets. Like, say, for example, there is a group lending practice in a large multinational group or large domestic group, where they borrow money in the holding company and then they roll over that money to their subsidiaries, and then from one subsidiary into another subsidiary, and then keeps on rotating with varying interest rates and varying cost arbitrage. Now, this could be a starting point of transactions that exist to inflate turnover in terms of interest income to achieve financial targets. Transactions that exist without economic substance. So again, a practical insight here. Say, for example, there is a IT company, doing a lot of innovation work and going for patenting, and is booking a lot of research and development expenditure. So that comprises of salary, that comprises of equipments, that comprises of many other things. But many times you find that there is no economic substance. So it's just to inflate the R&D expenditure to show that there is some innovation happening. But there is no trail to demonstrate a IPR is being created. So even the CARO requires, a lot of scrutiny of intangibles. So transactions that exist without economic substance is something that internal auditors should question, especially capitalization related transactions. Transactions that are made at the end of the year or beyond the end of the year. JVs and adjustments made post year end. Typically, this does happen that you have to make a lot of adjustments, including audit adjustments, but the pattern has to be evaluated and seen that what are the out of book adjustments that are made, what is the value, volume, and velocity. So these are some insights on unusual indicators and examples that internal auditors could look at. Now, we all are dealing with, a lot of startups in our ecosystem. So of the entire situation that has happened. And we as internal auditors, if we are associated with any startups, then I think these are some good early warning signals or watch out indicators for us. The first is that there is a flaw in the startup founder or promoter's approach towards corporate governance. So if once they receive funding from a venture capital or a private equity firm, they believe that there is nothing called as governance in terms of stopping them from doing business, scaling up, etc., etc. And they don't give priority to corporate governance, and they don't give priorities to risk management, fraud risk assessment. So there is no tone at the top, which is quite applicable and relevant to existing companies who respect the corporate governance regime. So this is clearly one indicator that has come out in the research. Second is growth at all costs. So in case if you are looking at the startups where you're auditing and you see this indicator that the private equity or the VC is continuously chasing the company to do a rosy top line and show a better bottom line, then definitely indicators are that the startup may go towards a busting kind of a situation, and you have to be careful as an internal auditor. If you see the approach of VC as a fear of missing out, that is again a good indicator. Exaggerated valuations, overestimation of the Indian market size. So these are some good indicators in terms of behavioral aspects that the internal audit fraternity or community could watch out for while dealing with a lot of startups in the internal audit exercise. Now, there are some fraud statistics, like 73% frauds are committed by men. Average age of fraudsters is 42. On a lighter side, this doesn't mean that you have to start the age profiling and the gender profiling of your auditees, but these are some good indicators that the trust violators are generally in the age bracket of 40 to 50. They understand the system very well in the organization. 5% of fraud perpetrators had previous conviction record. 95% are new joiners, new entrants to the fraud schemes. They are the ones who have been in the system and would like to beat the system. 54% victims recovered nothing. So there is a huge cost of fraud that an organization has to bear. 31% made partial recoveries and 15% recovered all losses. So doing a forensic exercise does yield results in terms of establishing accountability on the board, on the perpetrators of fraud. However, in terms of recovering money or losses, it's very difficult to tail back the monetary losses. Internal control weaknesses are responsible for 50% of fraud cases. This is a big opportunity for internal auditors where we can assist organizations in developing a good code of conduct, a good anti-bribery code, ethical policies of the organization, fair business practices, all those high level policies and procedures that indicate a management can do a management override if it is not put in place or if it's not designed in place. The top three most common fraud schemes are asset misappropriation, financial statement fraud, and corruption. Corruption takes the cake, is at the highest level. I'll show you the sectoral breakup also of fraud schemes. Tips and anonymous hotlines are the largest source of detecting frauds, and they continue to be so. Tips most likely to come from employees through telephone or emails. However, outsiders like vendors, customers also can do red flagging. Tips are received through letters and various other channels. So this becomes a great source of information for internal auditors. A practical insight in internal audit activity is that how much ever you look at the books of accounts, you may not get the pulse of the organization. To do an effective fraud risk assessment, you'll have to move across tables. You'll have to make a lot of informal connects within the organization to get a lot of hearsay, to get a lot of insights and information. And especially exited employees is one of the big source of information that internal auditors can tap with the approval of the chairman of the audit committee or with the approval of the sponsor of the internal audit exercise. Because anybody exiting the organization may not say so at the stage of exit, but after a month or two after the full and final settlement is willing to open up and give information about vulnerable areas that can improve the organization's internal controls. So this is a snapshot from ACFE on the various types of sectors and the fraud schemes. So right from banking, financial services to manufacturing, you can see the count of cases. Now this is on a very limited purpose survey sample of 2,500, 3,000 frauds that get surveyed on an annual basis across continents and across countries. But you will see that banking, financial services the highest count, followed by manufacturing, government and public administration, healthcare, energy, retail, and so forth, including construction. And then as you go down, the instances of fraud reduce. Again, on the slide, you will see on the horizontal side, various fraud schemes. And within the fraud schemes, you will see corruption as the biggest fraud scheme. Now, what do we do as internal auditors? Because corruption exists everywhere in most of the organization, and there is a practice of giving petty bribes to getting things done quickly. So we can develop certain fraud risk indicators by looking at this chart here. You can see and you can test whether there is a ethics and compliance program of an organization and how effective the ethics and compliance program is. You can see what is the due diligence that is done by the compliance team as far as all licenses, permits, registration procedures are concerned. Now, there are so many permits that are required to operate in a country like India, especially in the sugar belt, especially in so many other sectors. So wherever there is a requirement of a permit or a license or a registration process, more often than not, it becomes a vulnerable area. Also, where there is a purchase of land, again, it can be isolated as a transaction by the internal audit team to do a risk assessment, to see the rateable value of the land, to see whether stamp duty, etc., has been paid or no. And if there is a involvement of any black money in that, more often than not, quite possible. So we can identify specific transactions in our internal audit activity and specific accounts like gifts, travel, can be identified, use of supplier code of conduct or integrity packs, effective implementation of whistleblower policies. All these are examples of good internal control practices that can be effectively evaluated in a fraud risk assessment program, which may not necessarily form part of your traditional internal audit activity. But the moment you look at such accounts and such activities from a policy perspective, from a conduct perspective, you will end up looking at greater details. Like I'll give you two specific examples of one is a efficiency example and second is use of IT assets of an organization which are used in an unacceptable manner. So it is not always possible that internal auditors in a fraud risk assessment may discover fraud risks alone. They may discover inefficiencies in the organization. They may discover use of IT assets not as per the ethical and permissible policies of the organization. So one of the big areas of concern is use of legitimate IT assets for visiting shopping websites, for visiting illicit content on the internet. And global studies have revealed, and even in one of the practical fraud risk assessment situation that I carried out, we discovered the IT administrator himself visiting so much of illicit content on internet, and thereby became a starting point for doing a digital forensic exercise and reaching a conclusion about his conduct in the organization. So when you talk of ethics and compliance, it goes beyond the normal financial loss domain to an organization and expands to the realm of ethics and compliances which the organization has to put in place, including efficiency related parameters. So when employees are visiting uh, shopping websites and visiting so many other website, it becomes a open organizational flaw where internal auditors can start pointing out and highlighting it to ensure that efficient practices are put in place as per the code of conduct of the organization. And this is more relevant in work from home situations also nowadays. This is a snapshot of the top 100 banking frauds as analyzed by CVC. Again, a very interesting document that you can download from the CVC India website. It talks about fake invoice generation and shipping bills, overstatement of stock and debt balances and valuations, purchase of large number but we should make an attempt that any in a fraud risk assessment, any assets that are purchased are purchased through legitimate sources of money and are in a proper way registered on the name of company, and the sources of funding are legitimate. Turnover bubble through related party transactions. Revision of financials post loan disbursement. This is a big menace where organizations and borrowers are showing rosy financial pictures, getting them unfortunately audited, and then changing the numbers after the audit and the filings are completed. Common day large fund transfers from one associated entity to another entity. Again, a big fraud risk indicator for internal auditors, where you can trace out the money transfers happening between the group entities and check if 10 crores has come on one day at 11 o'clock, and is that 10 crore going to another entity during the end of the day, a same day fund transfer. So there is no reason for this kind of a fund transfer, right? If it is happening on the same day. What is the economic substance for that? Insufficient delivery of proof of goods and services is another standout observation of CBC India. Now, these are some key audit matters reported by statutory auditors in the annual audited accounts. These are some good indicators. These are not frauds, but these are complex accounting and audit matters that can give food for thought for internal auditors. The way goodwill and intangible balances are valued in the organization is classified by many statutory auditors as a vulnerable area, as a complex area where there is no sufficient audit evidence. Recoverability of project assets. There are a lot of infrastructure projects that are going on. And what happens after the closure of the project, or if the project has gone bust, recoverability of project assets become an issue when a physical verification is undertaken. So here, what the auditors have flagged off is that project assets are not being accounted for and not being physically verified. Revenue cutoff procedures are susceptible to misstatement. Discount and incentives to dealers, distributors are complex and voluminous, and auditors are not able to actually verify the discount and incentive schemes to dealers, distributors, because they are so complex that they keep on changing every month. So you have one product and you have multiple products offered free of cost. You purchase one product that is deep discounted, and then you purchase one more product along with that, which is again further deep discounted. So there is so much of complexity in the entire incentive and discount calculation and computations that auditors find it very difficult to actually account for, and that can become a fraud risk assessment area for internal auditors. Capital work in progress, inappropriate classification, other matters. Third party commitments, guarantees, claims, valuation of inventories, estimation of useful life of assets. Now, this again is one area from a fraud risk assessment perspective. Internal auditors, if they are focused, their entire fraud risk assessment on huge capitalizations, huge fixed asset revaluation exercise, the manner in which useful life of assets is being computed, certified by the management, in impairment indicators of subsidiary, associate, joint venture investments, and of course, related party transactions not meeting legal requirements. Now, a study done by Ministry of Corporate Affairs again gives a lot of food for thought in terms of the regular publishing of red flags done by MCA in terms of giving penalties to corporates and companies as well as vanishing companies. There's a frequent change of registered office address. Then there is a default in repayment of deposits. So as I alluded earlier that in a fraud risk scenario, if there is any form of default, even in terms of vendors, in terms of third parties, borrowers, lenders, there should be an immediate red flag in the mind of internal auditor. Non-filing of annual returns on time, non-convening of annual general meeting, non-furnishing of minutes of the meeting, non-maintenance of proper books of accounts, not furnishing of true and fair values in the financial statements, not doing CSR spends in the manner in which they are supposed to be done as per the law. Directors holding directorship in more than the threshold limits, political contributions, non-payment of adjudication penalty, illegal allotment of shares, form and contents of financials, loan to directors, intercorporate loans and deposits. So these are some default situations highlighted by the Ministry of Corporate Affairs in their inspections. Now, what are the red flags in terms of account and financial manipulations that we can look out for? Alteration and forgery of accounting records and supporting documents from which financial statements are prepared. Customer contracts, vendor contracts, employee appointment letters, reimbursement made on behalf of uh, clients, vendors, etc. A huge area in which alterations and forgery can happen. Conveyance and scrap takes the cake here. The moment you look at any scrap situation in an organization, you will realize that the manner in which the quotations are taken from the scrap dealers are quite identical in terms of the letterheads, in terms of the signatures of the quotations, in terms of the dates on which the quotations have been taken. Because generally organizations give the scrap contract to only one vendor, which is known to the organization, and that vendor will take multiple quotations to show that three quotes have been taken, and thereby doing forgery of underlying records. Likewise, conveyance, hotel reimbursements, you will see as far as even high profile employees are concerned, you will see a lot of forgery happening there. If there is an effective oversight in terms of sampling, etc., to be done in detail on conveyance claims, on food and beverage claims as well, omission of critical events and accounting transactions, missing documents, missing approvals, deliberate misapplication of accounting principles, recording of fictitious general entries, engaging in complex transactions to mislead stakeholders, incorrect valuation, mutual accommodation entry, net worth enhancement by introducing dummy properties and equity shares, like for example, to avail a borrowing or to avail a large private equity to demonstrate a particular net worth or to get a big registration, say in a SEZ or whatever XYZ legal registration that is required by the company. It may introduce a dummy shareholder or a dummy partner in the company with certain assets, and to enhance the net worth or to inflate the net worth of the of the company, and thereby creating a synthetic situation. Use of rubber signature instead of originals. Now, this has become a very common practice across the board after COVID, where you're seeing situations where all the original invoices actually are not being certified, but only are being rubber stamped and with some initials that are there on documents, on contracts. Now you don't even know that the initials has been put by whom. There is no proper authority matrix, there is no signature matrix for you to evaluate as an internal auditor. So you should, my suggestion to you is to disclaim uh, in your internal audit report very clearly about scanned documents, about looking at rubber signatures, not looking at originals, etc. Now, this is an example again published from the Government of India white paper on money laundering. It's a beautiful flow chart which demonstrates how birth of unaccounted money takes place outside the books of accounts and by manipulating books of accounts. Prime examples are there are certain vulnerable sectors which we know as sin sectors who are doing a lot of production of goods that is outside the reportable domains, and they are distributing those goods in the gray market to generate funds, to generate money, and then roll over and put that money back into the system. One of the biggest culprits nowadays is the cryptocurrency, in which people are taking their wealth outside the country uh, because obviously there are checks and balances in the remittance regime put by Reserve Bank of India. So there is a barter contract of a purchase and sale using cryptocurrency as a channel outside India, by virtue of which they are able to take money outside India and engage in a lot of corrupt and money laundering practices. Now let's quickly take a look at some digital age frauds. So it's a very common practice to nowadays have a impersonation of people's identity. So the starting point is business email compromise. Now, what are the vulnerable people? Chartered accountants themselves are quite vulnerable to this entire phishing and business email compromise cyber scam that takes place time and again. So you have payroll processing staff who generally are giving monthly remittances. Now they are spoofed. So fraudsters are studying the profile of CFOs, payroll staff, real estate transactions, brokers, CEOs, chartered accountants, lawyers. They know that chartered accountants are making a lot of payments on behalf of their clients. Lawyers are also doing a lot of registrations on behalf of their clients, vendor staff. So they start profiling the target for 6 to 8 months by indulging in social profiling, social engineering, and then testing the water by sending the phishing emails to the target. Then once the target starts responding, there is exchange of information and finally leading to wire transfer. Now what happens here is spoofing an email or website, spear phishing emails, use of malware, and business email compromise. So here I would like to ask that, as part of the fraud risk assessments, all of us can do a fraud risk check here of checking whether all the vendor related email IDs, all the customer email IDs, are they being verified by the management teams? If they are being verified by the management teams, then you'll have the confidence and comfort that emails are coming from authorized sources, and then those authorized sources are being further processed for making payouts, etc. So email verification programs and a check on emails is emerging as one of the key internal control areas for verification as far as fraud risk assessment is concerned. So continuing the digital fraud example, you will see hospitality industry and travel industry are the biggest vulnerable areas where phishing scams have happened, because it's very easy to hack into so many remittance transactions happening as far as hotels are concerned and travel agents are concerned. So we come to the next fraud stream, which is greenwashing. Again, a new area which is emerging in terms of fraud risks. So here what's happening is that because there is a global movement on climate change, a global movement on ESG that is happening, of expanding the non-financial MIS and non-financial indicators that an organization has to display to its stakeholders, to its investors, to the investment community at large, it gets pressurized to display compliances with non-financial indicators, especially ESG related indicators. So they start publishing information which is misleading about environment claims, which is abusive marketing practices and sustainable product benefits that are not proven. So you saw example of one medicine that was publicized for COVID, and the action that was taken by the government and by the Supreme Court in the country, which is one example of abusive marketing practices. So organizations are indulging in a lot of information communication which may not be ethical, and 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 this can become a fraud risk area because it impacts their reputation. So the pressure is coming from green investors. RBI has got a green investment guideline. SEBI has come out with a BRSR code. Shareholder activism is there. Consumer activism is there. Like in the National Green Tribunal in India, NGT, there are over 2,500 cases that are there that are being fought by consumers for pollution, for noise, air quality pollution, etc. And there are orders that are being issued by the National Green Tribunal very actively. Negative media reports, climate lawsuits. So these are all pressure points that are created on the company. And this becomes a starting point for the companies to crack under the pressure. And they start indulging in what is known as greenwashing, manipulate non-financial data with zero trails. Now you have a subject of audit trail which the auditors have to audit and verify, right? But I may ask that what is the audit trail for non-financial data, which the company is publishing in the annual reports in the various regulatory filings, say relating to pollution? Is it subject to audit trail? Maybe our institute could think about it and come out with some document on audit trail for non-financial information also. The rationale is no universally acceptable standard. There is no single acceptable universally acceptable standard that is existing for ESG related fraud triad. Low regulatory oversight and independent audit focus is not there. Independent auditors are very much focused on the books of accounts, and therefore the true and correct opinion and the fair opinion given by the auditors is very much on the financial statements. But on the ESG side, there is nothing much. There are global standards. So there are agreed upon procedures carried out by the auditors at the behest and request of the management and shareholders. However, it is not emerging as a best practice as yet. So McKinsey and Company has done a beautiful study in terms of fraud risk assessment and fraud risk management strategies, where they have given three pillars for an organization to look at strategically, specifically for those organizations that are in the online domain and are there in the digital domain. Know your customers, know yourself, and know your competitors. So these are the three pillars. So if you know your customers very well, it's coming from the trusted source. You know yourself and your checks and balances very well. And finally, you know your competitors in terms of threat intelligence that can be studied and that can be evaluated. So effectively, a fraud risk assessment for an online or a digital business model can be pillared on these three areas of know your customer, know yourself, and know your uh, competitor. So it also talks about continuous threat assessment. So fraud risk assessment is not a one-time activity, but it's a dynamic activity that needs to be done on a regular frequency, because business is dynamic, audit plans are changing very frequently. So the fraud risk assessments also should be done very frequently and in a continuous manner. So now let's take a practical example of how fraud risk assessment can be carried out in an organization. So these are the features of fraud risk assessment. First is description of fraud risk assessment. What is the objective and what are the fraud risks that we need to carry out? Determining probability of occurrence basis history and judgment. Level of materiality. Identification of anti-fraud controls. Assessment of internal control effectiveness as relevant to the fraud risks. Then what are the fraud risk mitigation and response actions? Responsibility of carrying out corrective actions and process ownership, and carrying out monitoring activities. Now, if we go further down, the steps are identification of fraud risk, do a scenario analysis with a practical example, like say, for example, you want to create a ghost employee to check whether the payroll team and the finance team is detecting a fake bank account or a fake employee in the payroll muster. You want to create a fake attendance record in the system. Of course, all this has to be done with the approval of the management. It cannot be done in isolation of the management. You cannot surprise the management with your fraud risk assessment steps, because the starting point is to take the management at the highest level in confidence, to take them into confidence, to discuss with them that what you are going to be doing, and then rolling out the fraud risk assessment scenario. Like in terms of a customer service scenario, to share with you a practical insight, there was a requirement by one of our clients to visit the service branches across the country, maybe around 70 to 80 branches, to check on the customer service levels and the customer service effectiveness. So it was a gold lending company, and we went there to see the customer service effectiveness level. So we decided to use mystery audit as a tool for the risk assessment exercise, and a piece of spurious gold, or a 1% gold was purchased, which was looking very similar to a gold ornament, and then that was stapled in front of the service branch to check whether they are accepting it or not. So out of 70, 80 branches, 4 or 5 branches demonstrated unacceptable behavior. They identified that this was spurious gold, but they led the team to another set of people who would give uh, loans against spurious gold, thereby encouraging competitors and indulging in a behavior that was unethical and not in line with the organization's code of conduct. So a lot of things come out, even in terms of vendors, mystery scenarios, try give out a lot of insights to the management, where you come across huge rate variation situations. So first and foremost is to identify a fraud risk scenario. And while you're doing a fraud risk scenario assessment, it's not necessarily that you are able to cover all the fraud risk situations in the organization. It's practically impossible. So maybe you could identify 4 or 5 key scenarios, and in a quarter carry out 1 or 2 scenarios. So you give output to the management uh, on a quarterly basis. Undertake, after you've created the scenario and assimilated your thoughts in terms of how you're going to be executing, then undertake a walkthrough of the process to check effectiveness of the internal controls against the scenario. Rate the fraud risks on a probability and impact assessment, like how we do high, medium, low in case of internal audit. Record lessons and learnings and communicate results and decisions to the organization. So now let's take an example here of a housing finance company. So this is the example of identity theft. An individual with a history of financial instability or criminal activities decides to use another person's documents to secure a loan. The victim is an unsuspecting professional with a stable job and good credit history. So here, you create a scenario that a person is forging the identity of another credit-worthy customer to avail loan from the housing finance company. Now, he may be in hand in glove with the existing company, with the existing agents, with the existing employees of the company, and the way in which the entire application docket is inputted in the system of the company. There could be a flaw in that. say in terms of single factor authentication like a password. So a password could be easy to crack of an employee. So what could be the improvement opportunity as far as internal controls is concerned? That to have a multi-factor authentication, so that, or a maker checker control, so that no single employee is able to put the application on a straight through processing basis in the home lending application of the company. So you could devise specific scenarios and try and test those scenarios either through a dry run or through a physical test model as per the comfort and convenience of the management. A dry run is a good way of demonstrating your intent on the fraud risk assessment exercise and identifying and unearthing areas of improvement as far as internal controls are concerned. So another scenario, again continuing in case of a housing finance company, is an employee, a deceitful real estate agent, both join hands to inflate the valuation of a property to secure a higher commission. He has conducted a previous visit to the property but plans to manipulate the valuation report without revisiting the site. So again, the various aspects involved in technical valuation for a housing loan and how the value of the property is inflated by the agent and by the employee of the company, and what could be the results of that. So opportunity to do fraud here is lack of cross verification in valuation reports from technical officers and a failure to follow the checker process. Meanwhile, constructions done by builders undergo biannual inspections at a minimum could be an area of improvement. So like that, you keep on developing fraud risk scenarios, and these are some examples, but because of paucity of time, I'm not going through all the examples today. Now, this is a matrix which is known as a counter fraud risk assessment matrix. How we publish a risk assessment matrix in our internal audit activities, and we provide assurance to the management. Likewise, as far as fraud risk assessments are concerned, we can develop a matrix that while we are auditing the fraud risks and giving out results to the management, we can give out results on the basis of quantitative considerations or qualitative considerations, and what is the action required. And the rating scale can be found to be effective, found to be partially effective, or found to be ineffective. Now, this rating matrix is published by the Commonwealth Fraud Prevention Centre of Australia. It gives a lot of good policies and procedures to carry out anti-fraud risk assessment related activities, which internal auditors like us can make use of. This matrix has been published by them. So we can rate the results of the fraud risk assessment on these parameters, whether they are effective, partially effective, or completely ineffective. In case of completely ineffective measures, the chances of fraud is very high, and we can advise the management to immediately, urgently remediate and rectify their internal control framework so as to safeguard against fraud risks. Now, how do occupational frauds conceal the various fraud schemes? So one part is that frauds happen, and another part is to conceal the frauds that have happened. So they create fraudulent physical documents to conceal the chain of fraud, to mislead an accountant, or to mislead an auditor. So like, for example, say to inflate the revenue, the customer contract can be changed, and then the revenues can be reversed basis the changes that are done in the customer service contracts, or side letters can be created to indulge in physical documents that are there to protect the actual fraud scheme. Altered physical documents like conveyance claims or claims, reimbursement claims to clients, like an advertisement agency. Again, there's a concept of subcontracting from one vendor to another vendor, to multi-layered subcontracting, in which alteration of physical documents is a very commonplace. Created fraudulent electronic documents or files, altered electronic documents or files, destroyed or withheld physical documents. So the list goes on, manipulation of accounting systems, etc. So altered journal entries. So internal auditors can look at all these schemes to conceal frauds as part of their fraud risk assessment checklist. That while they are doing a fraud risk assessment, if a fraud happens, then what are the ways in which the frauds are getting concealed as well. So now let's look at certain typical red flags of suspect third parties. Uh, One is appearance. While we do a fraud risk assessment, you have to do an extended internal audit activity. And you'll appreciate from my slides from the beginning that this is not part of a traditional internal audit activity. So you have to put in a lot of efforts, and it has to go as a separate scope item in the internal audit activities. And you'll have to convince the client to pay you for these activities where you can add a lot of value. So typical red flags of suspected third parties or vendors in an organization include appearance in negative databases and lists. If there is a vendor that is postponing right to audit continuously, then again it's a red flag because they don't want to be transparent and want to open their books of accounts for the work that is being given by the clients. Concealment of vital KYC and credit information. Frequent changes in senior management. Liabilities appearing in ROC search report not reported by the borrower in the annual report. Material discrepancies in the annual report. Not routing of sale proceeds through bank. Heavy cash withdrawal in loan accounts. Non-submission of original bills for verification purpose. Increase in borrowings despite huge cash and cash equivalents in the borrower's balance sheet. So these are some typical red flags of suspect third parties that can be evaluated as part of the fraud risk assessment program, which will require extended verification beyond the normal traditional work that we do as internal audit. Now, say for example, there are a lot of there is a lot of information published about say untimely demise or deaths of vendors and customers, and still the bank accounts are getting used for receipt and payment of money. So this also is becoming one of the indicators for red flags globally, where the organizations have started to track that if there is a death or an unfortunate event in the customers and in the vendor universe, that immediately is brought to the notice of the company, so that there is no misuse of the bank account on account of individuals who are acting as customers or vendors to the organization. Now, as far as tendering and bidding is concerned, again, there is a very long list, but I've summarized it for you here in terms of the red flags. So any bidding activity that is being indulged by our clients, we can definitely look at these situations to unearth any red flags. One is that the winning bid is too low when benchmarked with the past history, experience, and industry standards. So if the winning bid amount is very low as compared with the past history, experience, and industry standards, it definitely is a red flag. Majority of the bids have very close price range, similar terms and conditions, and technical specifications in the proposal, which means that there is a copy paste that is happening from one vendor to another vendor. Common contact points in terms of email IDs, addresses amongst bidders, common bankers bid security for majority of the bidders, intercompany connections, related party connections exist between various bidders. Internally good to go rated vendors, not in bidders, disqualification of good suppliers. So when management has rated a particular vendor as technically good to go, but that vendor has not been included by the procurement team in the bidders list, and has been disqualified. So definitely that needs to be investigated. that if the management has found some vendor to be of good, high quality or caliber, then why why the procurement team would disregard such a vendor? Whistleblowing complaint received but not acted upon against a vendor. Definitely a red flag where a whistleblowing complaint has been received but has not been acted against a vendor. Commonality of paper, color schemes, and fonts. So this is again a very, very good indicator where still there are organizations who are relying on paper and there is a commonality of quality of color. As I gave you example of scrap vendors also, where there is more often than not a commonality of letterheads, signatures, dates, etc. Bid specifications that are favorable to only one bidder. If the bid specifications have been made in such a way that all vendors stand to be disqualified and only one vendor stands out in the queue as the best vendor, it definitely means that there is some issue in the way in which the bid specifications have been designed and favored to a particular vendor. A few more red flags as far as tendering and bidding are concerned. Acceptance of late bids after the dates are completed or over. Changes in specifications after the bid opening. Suppliers awarded contracts that are disproportionate to their size. Definitely a red flag where the net worth of the company is say 5 crores but is being awarded a contract of 100 crores or XYZ. So there is a disproportionate net worth to the size of the bid uh, uh, equation that definitely could be red flagged by all of us. So these are some tendering related and procurement related red flags that could be taken up in a fraud risk assessment situation. Now, what are in general fraud risk indicators that we should be wary of, and we should try to focus our minds while we are carrying out the fraud risk assessment activity, or for that matter, even internal audit activity? Unusual transactions characterized by incompleteness of trail, missing documents, lack of authorization, shared access or sharing of passwords, splitting of authority limits, posting in incorrect accounts, outside average range of values, historical range of values, transactions undertaken at unusual times, frequent cancellations of transactions. So now, say for example, here there is a pattern that could be analyzed in a retail company on the quantum of returns that are happening, where online orders are being placed by various customers. But the quantum of returns generally vary in the range of 30-35%, 40% in a retail situation, in a retail sector. But here, the quantum of returns may be very high, say 50-60%. So it's quite unusual to have such large return. Quite possible that in case of such inflated return situations or scenarios in retail sector, the contract of the courier agency could be inflated, the logistics company could be inflated. So identification of outside the normal business situation and scenarios through data analysis and analytics is very important. Looking at the history of month-on-month history of sales, purchase, profits, margins can highlight a lot of issues to the internal auditor in a fraud risk kind of situation to evaluate the various checks and balances that could be missing in an organization. So spotting those critical items through data analysis is critical as far as fraud risk indicators are concerned. Poor ethical culture, poor practices such as bullying, toxic culture in the organization, tolerance to harassment, my way or highway, significant adversarial relationship exists between stakeholders, managers. There is a substantial sense of entitlement. So here, where there is a conflict in an organization that is perennially going on between key stakeholders, say the CFO's office doesn't get along with the compliance head or the internal audit head, or the CEO's office doesn't get along with the CFO's office. Now, here chances are that there is a culture that develops in the organization where there are silos of decision making, and there is no consensus, and there is no culture of sitting together and arriving at a particular decision. Chances are that the organization is going wrong as far as the ethical culture is concerned in the organization. So here the internal auditor's observation should be very sharp, very focused. Now this is easier said than done. It's very difficult for internal auditors and fraud risk assessors to actually come out in the open and start talking about the cultural issues in the organization. But there is a smarter way for us to look at it. What we can do is that, as part of our internal audit regular reporting, we can gradually start commenting on the organizational culture in terms of openness to receiving our observations, our recommendations, self introspection by various stakeholders and by the management team, and so forth. So once self-assessments, suggestions made by the management for improvement. So once you start tracking such behavioral attributes as part of your internal audit activity, then slowly, gradually, the management may get used to it and then allow you to do a fraud risk assessment on the cultural practices of the organization. So, but this could be a starting point for internal auditors to look at deep-rooted issues from a fraud risk assessment perspective. Poor staff productivity levels, employee disengagement, few over-trusted people in the system, and the authority is chained and the authority is centralized on one or three individuals in the organization. Inappropriate fraud identification responsibilities, poor understanding of internal controls, again a cultural issue in the organization. Lack of transaction reviews, managers' ability to suppress key reports, MIS not coming out on time, MIS not being communicated on time, MIS not being discussed, and corrective actions being taken on the MIS and the exceptions noted in the MIS is one big fraud risk indicator, because there is no system of feedback then in the organization. And if there is no system of feedback in the organization, then obviously there is no check and balance on the financial data that is being generated in the organization. Systems being accessed outside of normal working hours or from outside the normal work areas. With the advent of work from home, work from anywhere, anytime, uh, organizations are giving a lot of liberties to team members. But as a result of that, team members are also taking a lot of liberties with the management teams and indulging in corrupt and unethical practices. Moonlighting is something that we have all seen happening in our clients' situations. We have also seen a lot of trading activity that are being conducted by team members. So here in your fraud risk assessment, you will also have to look at technology as one of the subcomponents, because the fraud risk assessment to become effective and for you to prove a scenario to the management, your ability to engage with subject matter experts on technology aspects is very, very important, so that you are able to then demonstrate effectively that a fraud risk scenario that you have highlighted to the management can be executed using technology, can be executed using digital forensics, because quite a lot of fraud risk scenarios now are played out on the basis of data and information that are residing on clouds, residing on servers, residing on information domains, portals of the company and systems of the company. So for you to unearth any significant fraud risks, you'll have to develop capabilities in the area of analyzing, culling out data and analyzing data in a digital forensic kind of a preventive digital forensic kind of a situation. Here again, insider trading is one of the big risk areas for organization, where it could become a good fraud risk indicator for us as internal auditors to pick up and do assessment of data in terms of insider trading related matters. controls or audit logs being switched off, definitely a red flag indicator and definitely a audit trail deficiency as required by the ICAI guidance note also. So this is something which we could look at in terms of the fraud risk indicators while we are designing the fraud risk assessment metrics. Okay, let's take a question. Auditor is required to report frauds of the value of rupees 10 crore or more to the central government. True or false? We'll go to the menti.com again. Please go to menti.com and start typing your responses. Auditor is required to report frauds of value of 10 crores or more to the central government. True or false? Use the code 3284247. Hi, participants, requesting you to please respond to this question. Okay, I guess participants are not responding, so I'll go back to my slides. Okay, now here I would also like to highlight one specific technical guidance of the Institute of Chartered Accountants of India, which is very relevant for internal auditors. Although this guidance appears specifically for statutory auditors or external auditors, and their duties, responsibilities largely to statutory auditors. But the examples given here are very, very important and very critical for us as internal auditors also to look at, because statutory auditors rely on the work of internal auditors, and they'll definitely look at the indicators listed here in the auditor's responsibilities relating to fraud. So when a statutory auditor looks at circumstances, what are those circumstances and possibilities of fraud? So here is a listing. It's like a beautiful checklist prepared by the CA Institute. So the first is transactions are not recorded in a complete or timely manner or improperly recorded as to the amount, accounting period, classification, or entity policy. So whether it is revenue recognition, whether it is capitalization, whether it is research and development, intangibles, whether it is provisioning. So there are a lot of timing related issues in accounting, as we are always aware of, and there is an issue relating to estimates that the accountants make. So this is definitely one gray area, and we as internal auditors seldom get into these areas, but these are critical areas from a statutory audit perspective, and since they rely on our work, definitely there could be a question mark: unsupported or unauthorized balances or transactions. So where there is no confirmation of balances, then again it could become an issue for the statutory auditor is concerned. So there is no substantiation of vendor customer balances. So this could be one area for internal auditors also to look at. Last minute adjustments that significantly affect financial results. So just before the audit committee, just before the board meeting, there is an adjustment to the revenue figure, or there is the adjustment to the expense figure. So any last minute adjustments, statutory auditors are going to look at it very, very carefully and with a lot of suspicion. So internal auditors must look at what are the last minute adjustments that are happening to protect their own interest. Evidence of employees' access to systems and records inconsistent with that necessary to perform their authorized duties. So if the employees uh, need to know, need to do basis access is not there and going beyond the normal protocols of access, then definitely it becomes an issue. Tips or complaints to the auditor about alleged fraud that are being disregarded. So where there is a anonymous tipping complaint system available and there is a receipt of such tips or complaints, but they are being disregarded by the management, certainly there is an indicator of fraud in the company that is being brushed aside and not being reported to the board of directors. Now there are a lot of transactions, like in recent press also you would have read that there are so many instances where uh, say a particular critical activity that was to be reported to the board of directors or the audit committee is not being reported by the management in a timely basis. So they are hiding information from the highest level. And when such hiding of information is happening, then definitely there is a possibility of a fraud. Conflicting or missing evidence, including missing documents. So like say for the capitalization, there is no chain of documents relating to the title, relating to the registration, relating to the originals, documents that appear to have been altered, unavailability of other photocopied or electronically transmitted documents when documents in original form are expected to exist. So here organizations are using very good electronic signature systems where documents are being signed in a proper trail-like format where both the parties are putting their signature together and the document is encrypted and will not be available for any kind of tampering post the signatures put by the organization, by the stakeholders. So whether organizations are moving towards such kind of checks and balances and systems where any kind of a tampering of documents can be avoided. Significant unexplained items on reconciliation, unusual balance sheet changes or changes in trends or important financial statement ratios or relationships, for example, receivables growing faster than revenues, inconsistent, vague, or implausible responsibles from management or employees arising from inquiries or analytical procedures. Now, again, this is a very big indicator from a culture perspective of the organization, where the internal auditor or the statutory auditor has made certain specific inquiries, but there is no explanation forthcoming from the management, which is justifiable or which is meeting the expectations of the auditors. And if this kind of a situation has arisen, then definitely there is a fraud risk indicator. Unusual discrepancies between the entity's records and balance confirmation responses and replies received. So there is a clear distinction and a huge difference between the confirmation received from third parties and what has been shown to the auditors. Unusual discrepancies between the entity's records and confirmation replies, large number of credit entries, adjustments made to the accounts receivable records. So there are a lot of reversals that are happening in the receivable balances. Unexplained or inadequately explained differences between accounts receivable sub-ledger and control account, or between the customer statements and the accounts receivable sub-ledger. Missing or non-existent cancelled checks in circumstances where cancelled checks are ordinarily returned to, and so forth. So, you will find a very long list here. It also includes indicators like customer complaints, vendor complaints, fair practice code not being followed by an organization, are all clear fraud risk indicators. Unusual delays by the entity in providing requested information. So there are lots of areas here in terms of a rich list of items that can be converted into fraud risk assessment fraud risk assessment indicators by internal auditors using the lexicon of statutory auditors as given by the institute in SA 240. Then also the interpretation of the code of conduct and the decisions taken by the audit committee and by the management on specific gray areas in terms of violations of code of conduct and the accountability exercise set by the management, the example, set by the management, etc. So it's a very interesting list, 240, that can be used for the benefit of internal auditors. Now I'll go to the last section of my presentation and slides. So we look at what are the anti-fraud controls. Yes. Okay, I'll just. Sorry, is it visible now? Okay. So I'll go to the last section of my slideshow. I'm talking on what anti-fraud controls are most commonly used in the organizations and what need to be tested in a fraud risk assessment program and in an internal audit program. So first is existence of a detailed code of conduct in the organization, which would include all ethical situations, primarily from an insider trading, from a corruption, from a victimization, from a vigilance perspective. All these aspects have to be covered in the code of conduct adequately, properly, in terms of sharing of organizational information, confidentiality, benchmarks, etc. Existence of external audit of financial statements, which is a given. Existence of internal audit department and the resourcing of the internal audit department. Management certification of financial statements. Now here it is not only signing off the balance sheet and the P&L. It is about substantiation of the ledgers, sub-ledgers, and signing off by the GL owners. So there has to be a hierarchy of certifications. So in a fraud risk assessment program, the internal auditor can verify the hierarchy of certifications through a substantiation process to see the general ledger ownership at the last mile. So right from the top, if there is a travel claim, then whether the travel claim is accounted properly, is as per the policy, is as per the budget, who has approved it, then how it has been put in the system for claim, who has put it in the system for claim. Finally, the ownership and the chain of authority for the approval process. So all these steps, how effectively have been executed in the system, authorized, approved, certified, to check the maker, checker, the verifier, and the approval. Go to 4 levels to see the certification process. Then management review, internal financial controls testing, hotline, independent audit committee, fraud training to employees, fraud training to managers, executives, existence of anti-fraud policy for the organization, employee support programs, especially for those employees who are in distress, and doing behavioral surveys of employees behavioral surveys of employees is becoming a very good tool in the hands of the management. There is a concept of emotional intelligence, which we all are aware of. Managements are taking a cue out of this subject to see the level of self-regulation and self-awareness amongst their workforce and amongst their employees as part of entry fraud policy, employee support programs, dedicated fraud department function. Of course, this applies to large organizations, not to smaller ones. But in smaller organizations, there can be an appointed vigilance officer who takes ownership of anti-fraud related activity. Maybe organizations that are below 100 in headcount, they can appoint one vigilance officer who takes charge of the vigilance related matters in the organization to make a beginning as far as fraud risk assessments are concerned. Proactive data monitoring and analysis, surprise audits, job rotation, mandatory vacationing, and rewards for whistleblower protection and rewards for whistleblowers. So what are the types of background checks run on perpetrators prior to hiring? So this is one interesting statistic that can be used in the fraud risk assessment program by us, where we can check that while the organization is hiring employees, whether the following checks have been completed or no. And if any of the following checks are lacking or found to be lacking, then it can be red flag to the management. One is the past employment history of the person. Second is background checks, criminal checks, education and degree verification, reference checks, credit worthiness checks, drug screenings, and others. So these are some good practices or best practices that can be used in employee screening in background verification activities and can be suggested by us. Now, while we test the various anti-fraud control programs, one area which is the most critical one is of detection of frauds. And in this, the maximum frauds, as has been explained earlier, is coming out of tips given by employees. So 43% of frauds were detected by tips given by employees. So where there is no effective whistleblower program for employees, customers, and vendors, definitely that itself becomes a red flag for the management, because the management, as well as the internal auditors, as well as the board and audit committees, are actually not able to see the critical areas or flaws in the organization, because there is no tipping program, there is no anonymous hotline available to the audit team or to the management to unearth any kind of a fraud. So as part of the fraud risk assessment activities, one of the most important critical areas for us to focus is an effective whistleblower program to check whether the effective whistleblower program is receiving anonymous tips, and those tips are being evaluated for fraud consequences, being appropriately reported and disposed of. So all these sequential activities should be done and can be tested by the internal audit team as part of the fraud risk assessment activities. Now, which are the um, accounting is 12%, sales is 12%, customer service 9%, and executive upper management 9%. Executive upper management, again, to create a fraud risk scenario, very difficult for us. Maybe we can do a very detailed code of conduct review, not a fraud risk assessment, but a code of conduct review to check if there is any violation or there is any misinterpretation of the code of conduct. Yes, we can do mystery visits for customer service, for sales, for operations, for accounting, etc. We can definitely develop a lot of fraud risk assessment scenarios to do the testing. So as far as SI 11 considerations of fraud in an internal audit is concerned, the message for internal audit fraternity is very clear in the SIA. The internal auditor should possess reasonable knowledge of factors that might increase the existence of opportunities for frauds in an entity and exercise reasonable care and professional skepticism while carrying out the internal audit. So it is expected by the SIA 11 of internal auditors to possess reasonable knowledge of factors that might increase the risk of opportunities for fraud. That is the fraud risk indicators, as explained to you earlier on the slides, and unusual business, significant business transactions. The examples that we discussed. In an entity and exercise reasonable care and professional skepticism while carrying out internal auditor. Here, the internal auditor has to work very closely with the statutory auditor, has to collaborate and communicate with the statutory auditor, with the compliance head, with the risk head, with the internal audit head of the organization in devising a fraud risk assessment program so that the working papers are effectively crafted, created, and can be demonstrated to comply with SI 11. Internal auditors should document fraud risk factors identified as being present during the internal auditor's assessment, process and document the internal auditor's response to any other factors. If during the performance of the internal audit fraud risk factors are identified that cause the internal auditor to believe that additional internal audit procedures are necessary, the internal auditor should document the same. So just like how we do extended sampling in internal audit, while we have documented the fraud risk indicators that may apply to the industry and specifically to the company, we have tested a fraud risk scenario or situation at the ground level. And if we have found certain control deficiencies, it is quite possible and it may be required for us to extend our sample in other areas also, similar areas, to check if the deficiency is existing and extend our procedures and document the same. Now, how can we improve our fraud risk assessment capabilities? This is the last concluding slide that I have. Then maybe for question and answers, 5-10 minutes. In summary, there are 8 or 10 important areas that I'll try to summarize from my presentation today on how we can initiate and improve our fraud risk assessment capabilities. First and foremost is developing a sound understanding of the industry and business knowledge. If we don't embed ourselves in a sector and the company's business situations, it will be very difficult for us to actually anticipate and identify fraud risk scenarios. So your proximity and closeness to the business and the business captains is very critical for us to come out with an effective fraud risk scenarios. Very important. Here, I'll give you a practical insight. During the course of an internal audit activity, my team was continuously being resisted for providing information such as minutes of meetings with the vendors, negotiation records with the vendors by the supply chain department of a company. Now the behavior came across as a cultural issue and we were being stalled for almost 5 to 6 months. And there was a emerging discomfort in the internal audit team that the supply chain head is perhaps playing games with the internal audit team and not ready to supply critical information, giving us the run-of-the-mill information, quotations, etc., but specific information was being dodged. So what the team did was approach the audit committee chair and highlighted this cultural matter or issue. The audit committee chair said that, let's do a fraud risk scenario on the supply chain department. And as part of the fraud risk scenario that was carried out, it was decided that because information was not forthcoming in the normal day-to-day affairs, business as usual affairs of the organization, we did a lot of data analysis of the supply chain department in the ERP system, outside the ERP system, including the email domains. And while doing so, we came across some startling information. So the information that we came out with was, certain personal information and records that clearly indicated commission payouts to by the vendors to the supply chain head, and so much so that the entire commission computation files, etc., were unearthed in the fraud risk scenario, which was done with just to find out that whether there is something. But when the activity started and the data was backed up and the keyword search and analysis was done on the target's laptop, uh, we came across with a gold mine of information. So much so that, the fraud risk scenario actually turned into a fraud investigation exercise, later on into a forensic exercise. So sometimes the starting point is a conversation between the audit chair, between the CFO, CEO's office. They have certain suspicion in their minds, and they are also wanting to do a fraud risk assessment or a scenario assessment. But it's just that the internal auditor has never come forth and discussed that kind of a situation. So there is a great opportunity for us that if we communicate and collaborate with our clients by talking to them about fraud risk assessments, we will end up understanding the industry and having a greater knowledge of their business and do an effective fraud risk assessment. Participate in learning and development initiatives as you're doing today, leveraging the power of data analytics to identify outliers. So there are great tools available to do data analysis, analytics, maybe for a separate session for another day. You have idea analytics, you have so many tools available in the marketplace to analyze data, and they create a lot of summarized information. Even Excel for that matter is very, very useful. Leveraging artificial intelligence to identify sector specific fraud risks. Now, this is again a very good tool available to our disposal to internal auditors. You can use Copilot, you can use Chat GPT, and a simple search will give you the risk, fraud risk profile of sectors, of departments, of functions, and you can use a guided library to start the fraud risk assessment discussions with clients, and thereby picking and choosing from that library and discussing the realities with the client, that whether actually it is going to be useful to the client or no, and prioritize the fraud risk assessment scenario. Because many times internal auditors come with a idealistic mindset which may not align with the business mindset. So it is very important that any fraud risk assessment scenario that you do, you take the client into confidence, communicate effectively, and then design the fraud risk assessment scenario. Risk assessment and materiality assessment plays a very big part. So prioritize areas with higher fraud risks during the audit planning stage. Consider materiality thresholds for fraud detection. There's no point in going after petty immaterial items. So your fraud risk assessment has to be uh, good enough, has to be substantial and significant for you to come out with effective results. Collaborate and communicate with management, auditors, compliance, legal team, share insights and suspicions to enhance overall fraud detection efforts. And definitely look at the whistleblower programs and hotlines. Encourage employees to report suspicious activities in your annual communications as an internal auditor. And internal auditor can certainly follow up on tips received through these channels. So in summary, these are some areas where we can look at for fraud risk assessments and improve our entire profiling and our output as internal auditors. With this, I conclude my session for the day, and I would like to thank all of you for the patient hearing. If there are any questions, I'll be happy to take these questions.
Yes, sir. One of the participants wants to know that e-audit matters are at the behest of the key management personnel. So, how as an internal auditor we can effectively program it and how we can report it to maintain the independence of an auditor?
Sorry, Shweta, can you just repeat the question?
Yeah, yes, sir. So the key audit matters are the uh, key audit matters have been reported by the management personnel. So, how then internal auditor effectively detects such frauds, and what are the avenues available for internal auditor to maintain independence in reporting?
Okay. So see, the key audit matter slide that I showcased to all the participants, key audit matter is a compulsory standard issued by ICAI for auditors to report as part of their statutory audit reports. So I have taken some research and snippets to give fraud risk scenarios that can happen to internal audit fraternity. So key audit matters are generally reported by statutory auditors, not by the management. So while statutory auditors have reported, if they have reported a key audit matter, internal auditor can certainly take a look at that as part of the fraud risk assessment scenario, and can definitely engage with the management. Like say if there is an incentive structure which is very complex, being paid out to distributors or being paid out to any other stakeholders, and whether statutory auditor is finding it difficult to vouch and verify the discount and the incentive structure to the distributors. So internal auditor can offer that since this is come out as a key audit matter by the statutory order, it could be a fraud risk area, and we can certainly have a look at it. And the internal auditor actually can come out with an opportunity for himself in doing an independent verification and giving comfort to the management and to the statutory auditor.
Okay, sir. And I have to ask one question that as an internal auditor, our scope is very restricted and defined. So how I can extend it? I mean, fraud risk is very certain area. Somewhere we know that something is fishy, but not able to catch it up. So how you will suggest we should proceed for that?
So I think the devil lies in the scope setting exercise. Normally, as internal auditors, we have a tendency to copy paste the scope of the previous years and use it as part of the internal audit activities, but that is not the correct way to look at it. Annually, the scope has to be risk assessed. So basis the risk profiling of each auditable unit, whether it is a department, a geography, a location, a plan, or any other auditable unit in the organization, a risk assessment should be done. And the vulnerable areas, like say inventory is a fraud risk vulnerable area, or any other such areas in the organization, say receivables or debtors area. So such areas can be put forth to the management that the high risk areas as far as frauds are concerned are receivables and inventory management. So maybe the internal audit scope can be expanded to include these areas for a fraud risk assessment exercise, or even for that matter, purchase. So as I mentioned that it may be difficult for us to implement a fraud risk assessment exercise initially in year one and do everything, but we can start gradually, slowly, by documenting the fraud risk assessment areas, discussing with the management. But here I would like to give a word of caution to all our listeners, is that SIA 11 makes it mandatory for us to document fraud risk areas. Whether we are sharing it with the management or no is a different matter. But as internal auditors, SI 11 makes it mandatory for us to document fraud risk indicators in our working papers.
Okay, sir, that's all. I would like to extend my heartfelt gratitude to C. Josefa sir for presenting such an crucial topic where we are on constant monitoring. CA is being targeted by various authorities and organizations where our work is being viewed, and we have been constantly criticized if we are not performing up to the mark. And where there are lots of fraud happening in this today's business world, sir have very well explained how to go further, how to take chances, and how to proceed further. I hope all the participants have got a knowledge and they will use and implement this. And it was a very insightful session. Thank you so much, sir, for
Thank
providing
you.
us with the valuable and all the statistics. I personally enjoyed it. I never thought that as an internal auditor, also we can get so much of opportunities to work, because this is a whole key area where we can get and grab opportunities. So thank you so much, sir,
Thank
for,
you.
and
Thank you
thank
for
you to the board
inviting
of
me.
internal audit and management accounting for hosting such a great webinar where we got an insight on how to proceed further and how we can whole lot experience a new area or arena for practicing.
Thank
Thank you
you.
so much, sir.
Thank you. Thank you. Bye.